Good evening, all. This is Shea Horowitz, ShogunTrading.com. I want to talk a little bit about what the type of market we're actually in right now. This is the S&P 500, my favorite index right now. You can see these moves on the 60-minute chart, and there's a really good reason why I'm using 60-minute charts right now. Here's a daily chart, and you can see very nice trends, very nice trends, very nice trends. All these trends that are really incredible and gave us a lot of profits. But what the market has been stuck in right now is humongous amount of volatility. Very large days, very large days, very, very large days, very, very large days, and we didn't really get anywhere. We haven't really gone anywhere since October. We're basically at the same price. We're basically the same between the same resistance and support, which is not a good thing. Now, if you look at it on a 60-minute basis, then you have something to do. There's a nice downtrend over here, which we captured, uptrend, which we captured, uptrend, which we captured, small downtrend, small uptrend, small downtrend, and this one was absolutely tremendous. This uptrend was tremendous. It does not, it looks good on this chart, and it's worth about 50 points on the S&P 500, which is really not a whole lot. But if you go on a daily chart, if your time frame is a daily chart, it makes it very difficult to trade. Because the trades that I showed you, barely even show up on the chart. They look just like blips. So, the goal of every swing trader, of course, is to catch the swings in the market. But you can't stay too rigid. You can't say, I'm only going to work with daily charts. The definition of swing trading is actually all the way from hourly charts all the way to weekly charts. You swing with the market. So every time you have to ask yourself, how's the market swinging? What time frame is the market swinging on? And the way I do it, the way I work it, is I look for the charts that show me the clearest trends. And right now, the charts that show me the clearest trends, of course, are the hourly charts. So what's going on with the market right now? Well, we came out of consolidation, which was great. And then we penetrated resistance, which was great. And then we ran out of steam. Absolutely ran out of air. The market absolutely choked. Once it choked, it started coming down. Yes, unemployment came down, and unemployment numbers came out, and so on. But, frankly, we all thought unemployment was going to be bad. We all thought housing was going to be bad. I mean, everybody thought it's a disaster. I think what's going on right now is the market's waiting for inauguration. Inauguration, I think, is going to happen on the 19th or the 20th, one of those. And that's what the market is waiting for. That's why it's moving sideways. It's looking to see, okay, what's new? Well, what's going to happen to us? Remember, the market really hates uncertainty. The market wants to know what's going on so it can invest the money, so it can take the chances and so on. So that's what we're doing. Now, even though on the daily chart the market is not really moving, the 60-minute charts are working really well. I just want to show you a few trades that we did. This is one that we did, and we captured it this way, which was very nice on a CX. CRM also worked out very nice for us. They're small profits, from 31.50 to 34.50 or so, but it's still very good. It's 10% in just a couple of days. This one, for example, TRN, also you can see from 15.25 all the way up to 18. Now, these are all taking advantage of the S&P 500 taking the trades exactly the same. What I do is I look for trades, I look for stocks that are going to take advantage of the market trend. Here's UAUA, an airline. Came out of the wedge-shaped consolidation, came up, worked out extremely well for us. Rambus, now this one is an interesting stock. We bought this one at around the $16 level, rode it up. Over here, we're showing some danger signs, so we put a stop right here. Once it penetrated stop, we're out. And look what happened to it. It lost some kind of a lawsuit. But that's why stops are important. That's why picking your exits and knowing when the stock is done doing what you thought it was going to do. Remember, my only exit signal, my only exit philosophy is we always exit a trade when the reason for our entry no longer exists. And over here we had a triple top, and once it broke that support, we are out. CTSH, also one of those really, really nice trades, nice uptrend. OVTI, also extremely nice. Again, the profits are there. I mean, you can get the 10%, 20% trades on stocks if you find them, stocks that are volatile enough, stocks that are capable of moving enough. It's not just enough to pick stocks that will move, but you want them to move long enough of a distance if you time it with the S&P 500 right there. So the swing trader needs to learn patience. It needs to learn when to trade and when not to trade. What is the market doing? Is the market consolidating? And if you look back in our newsletter, you'll see that I've been calling for this wedge. I've been calling for this move for a long time. I said that around the first of the year, there's 1230, 1231, 102, something's going to happen. If you remember correctly, here's a daily chart, and here's 2008. Look what happened right at 1230. Right at 1231, we had a tremendous downtrend. Now, I think really the same thing is going to happen right now. I think the market is a little shy about it, but I do think we're going to keep going up and so on. And this is the right time, by the way, if you're a long-term investor, is to get into the market and buy those ETFs, the QQQQ, the SPY, the diamonds, or if you want to leverage them up, the other ones that are actually leveraged. Although I do like the spiders myself. Of course, I would wait for the market to penetrate that 922 resistance level again, which it hasn't done quite yet. So what are we doing right now? We're in wait and see mode. We are looking for the market to build the next trend. There is no reason to trade right now because what we're doing right now is a pullback inside the trend. If we penetrate the 922 again, I'll be looking for the long side. I'll be looking for longs, and we'll be capturing the stocks on the long side. Anyway, don't stay on the sidelines. Don't decide that just because the market is not rocking, there's no profits. There's plenty of profits. There's no reason why you can't do those 10, 20% trades on a weekly basis. Anyway, the big trade is going to happen if we break the 922 again. If we break the 856 on the S&P 500, the trade is going to be the opposite way. I hope that doesn't happen, but we'll have to see. Have a great week and good profits. Take care.